Good day everyone, and welcome to our weekly analysis video. So just to let you guys know, today was a holiday in the United States and the volume in the market was a bit low, but that does not mean we didn't get any movements. There was price movement, but it was limited. There was low volume. The futures market was open as normal, but the cash market was not open in the United States. So be that as it may, our bias on dollar index hasn't changed. We are still way bullish on dollar index. Now looking ahead into the week, and when we look at the calendar, right, today there were some fundamentals that were there. Most importantly, the retail sales for Australia, and then we had the sales PMI for the pound, and we also had ECB president speaking just around like lunchtime, but there weren't much reaction. Market was not trending that much, except for the Aussie dollar. It did trend a bit. Then tomorrow, looking ahead to tomorrow, we've got the RBA interest rate decision. So for those that are looking to trade Aussie dollar, make sure you take note the decision that's going to be made by the RBA. And then further into the session, as we head into London Open, we've got the construction PMIs for the pound. Then we've got the German economic sentiment for the month of July. These are definitely going to move the euro, whether it's to the upside or downside. That much I'm not sure about. Then as we head into New York Open, we've got the PMI numbers for the non-manufacturing industries for the month of June from the United States. That definitely wraps up the most important fundamentals for us on Tuesday. Then Wednesday, we have to look at these job openings. They'll only come right at New York Open. Then we also have the FOMC meeting minutes. Now these are the minutes from the FOMC, not the interest rate decision. These are minutes from their last meeting. Then on Thursday, we've got the ECB monetary policy statement also. That's from the Central Bank of Europe. Then we've got crude oil inventories and initial job loss claims. Expect dollar to be trending around this time. Then Friday we've got GDP from the pound, UK, and then we also have Bank of Governor speaking. Can you see the time? Take note of the time, guys. Remember, time and price delivery. Take note of the time that these fundamentals are coming out. 8 a.m., 12 noon. You see, 8 a.m. This is just 1 hour before the cash market opens in London Open. 12 noon, lunchtime, London, mid-London session. Then we also have ECB president speaking. This is now Friday. Then we've got the monetary policy report from the Federal Reserve, right, to wrap up Friday. Then we've got the commitment of traders reports coming out. We also have trade balance for the pound on Friday. So now this is something you have to do on a weekly basis, whether it's a Sunday or a Monday. For me, I prefer Monday because I like to see Monday's trading range for me to make my weekly forecast. So from all these fundamentals here, right, and then when we look at the charts, right, when we look at the dollar, right, we are bullish on dollar. I'm still strong bullish on dollar, but this week or sometime before the 14th or 15th of July, expect a pullback on dollar index. Expect the market to pull back a bit before we see another explosive move all the way to the 93 price point. Now, when I say expect a pullback, where do we anticipate the market to pull back to? Right, we've got the 92.099, so that's the 92.10 price point. Then we've got this low here, the 91.797, that's the 91.80. Then we've got our pivot, very strong, interesting number here, 91.64. Remember, this is the ideal area that I highlighted again from last week, this area, to say whenever price pulls back or corrects to 91.64, that's your ideal area for another swing trade to 93.10. Now, before we get into it, let's look at the COT report. I've already captured the numbers so that I don't take much of your time, guys. And the non-commercials, last week they took some profits on their long exposure, but this week you can see they've added more longs on dollar, and they've added a short section on their short exposure. Now, the interesting number that I want to draw your attention to is on the commercials. The commercials, they're taking huge profits on their long exposure. That is very interesting in respect of that pullback that I was talking about. Then on the short exposure, the commercials have added about 350 positions. Now, long positions, they're holding just above 840, right? They've reduced again their net exposure, long exposure on dollar index. And when you look at open interest, it didn't jump by much, just about 295 points. That's 0.85% from last week. This is not a movement in open interest which we should expect a huge move, right? Now, if we are not expecting a huge move on dollar index, what type of price action should we anticipate? Now, swing trading concept. In bullish markets, remember, the down close candles, they should provide support. Remember, in bullish markets, this is back on I think it's week 3 of your mentorship, guys. In bullish markets, expect the down candles to provide support, and then we'll see further rally to the upside. Now you can see already price has filled a fair value gap to the downside. This gap has been filled, right? Then price retraced back. You can see here this daily chart. We've got this candle here, Thursday's price action. It was validated on Friday as a short-term bearish order block, and today price pulled back right to the open of the daily bearish order block, and then it found resistance and dropped. Yes, volume was low. Even if I go to, let me highlight the open, right? So it's a 92350. You go to H1, you can see how price found resistance here. So this was London open. We had a correction during London open into our Thursday daily bearish order block, and then price found resistance and dropped roughly around 20 pips. Now those 20 pips, if you come to EURUSD, right? EURUSD is this move here. See, this is the move on EURUSD, roughly also around 20 pips. Now that's not a market you need to be participating in. There is no volume. You need to participate in markets that are trending. But for the sake of our analysis, our price action, you can see Thursday's candle was validated as a short-term bearish order block, right? Now, if we are expecting down candles to provide support, we are bullish on dollar. That makes it interesting. Now we have filled the fair value gap, but you can see there's still weakness in dollar on the daily time frame. Yes, our trend is strong to the upside, but if you are in long positions there, those long positions, they are becoming weak, meaning we should get some pullbacks. Now these pullbacks, expect them to happen on down close candles. Now already you can see here we've got a series of 3 down close candles. Price found support. Now expect the market to really correct to the downside, right? So this level becomes interesting. We had a consolidation here. You can see we had a market consolidation, then we rallied to the upside. Expect price to come back inside this range. That brings us to 91644. We're just gonna call it 9165, a whole number. 9165. That would be your ideal area in the near future if dollar revisits that price point for you to be a long trader. Now what I'm saying here is expect dollar to find support when it gets there. I'm not saying take a short position with your target at 9164. No, you are going against the trend, right? You don't go against the trend. If it's a case that 9164 does not hold, then this bullish order block here, it will be your ideal long entry to the upside. That is if 9164 does not hold. If we get a breaker to the downside, probably a candle like this, you see, if we get that type of price action around 9164, then expect 9140 or 9138 to be your ideal area to take long positions. So that's basically what I wanted to share with you in regards to dollar index. We are still long term bullish. You see what I was saying about 92.10 when I first started the video. 92.10, we've got an bullish order block there on H1. This level should provide some movements to the upside. Now if you're expecting that dollar will find strength in down close candles, make sure that down close candle is a discount array. Make sure it's a discount array that is going to provide support. Now if we are strong bullish on dollar index, that means we are going to be bearish on Euro USD. Now Euro USD, when we also look at the daily time frame, I'm expecting a correction to the upside, before the market continues going lower. Our target on our long-term target on Euro USD is this fair value gap in here. Price will look to fill it up. We traded down, we couldn't really come any further down here. You see, we've got a fair value gap here. That's your ultimate target on Euro USD. We are still like around 80 pips to fill up that gap. Now that should be your target, right? If we look at the weekly candle, right, this is the weekly candle on Euro USD. Expect this candle to close bearish, right? Same applies when you look at dollar index. See, when you look at dollar index, expect this candle to close bullish when it comes to Friday's close. This candle should close bullish. There's buy stops above last week's high, and we've got sell stops below last week's low. Expect this candle to close bearish. Now what do we need to see in terms of price action tomorrow on Euro USD? If we get Tuesday trading above today's high, right? Take note of the time. Is it during London or New York session? Mark that high, you see. Then come Wednesday, you'll be shorting the market with your stop loss above last week's high. You see, that's how you trade using less risk. If you want to trade with a high risk, then you can short the market and you put your stop loss above Tuesday's high, because we won't expect the price to revisit. If it does revisit, it will be on Wednesday again, creating another high. Remember, in a bearish market, expect the high of the week to come through Tuesday or Wednesday during London or New York session. So we are short on euro US dollar. Now let's see what the COT number has to say in regards to euro. So the non-commercials, they've added more longs and they've added a bit of chunk on their short exposure, roughly about 3,000. And when you look at the commercials, they've also added about 4,000 on their long exposure, but they've taken profit on their short exposure, meaning we should be seeing euro correct a bit to the upside. Euro should have a correction to the upside, meaning all the up close candles, they should provide resistance. All the up close candles on euro USD, they should provide resistance on price, and then we'll see market trade lower. Coming to the pound, the same applies, right? When you're looking at pound, we are looking for short positions, right? Pound, we are looking to trade to the downside. So meaning you need to define your premium arrays on pound where you are going to short the market. Now expect this current week on pound to close bearish or a very small bodied bullish candle. Now we are going to be shorting pound USD. From which levels? Expect the up close candles to provide support, to provide resistance, I mean. So meaning you are going to be hunting for short positions in these bearish order blocks. You see, like this candle here, this was our last up close before the impulsive move to the downside. Now if you look at it, it came into that range and then pound dropped a couple of 22 pips. Yes, that is to be expected. Today there was no volume in the market, but you can see how price is reacting. You see how price is reacting at the current bearish order block, which is this candle here. You see how price is reacting there. So now, since it's already towards session close, we're not going to see much of movements, but come tomorrow 9 a.m. expect these up close candles to provide resistance. You see, expect the sellers to come back into the market, and then market moves to the downside. Now looking at the COT number for pound, the COT number for pound, you can see that the non-commercials, they added a few positions on their long exposure. Same applies on their short exposure, about 300 positions there, and then here just above 100. But now when we look at the commercial side, they've taken profit on their long exposure. Now that's interesting, right? They've taken profit on their long exposure, the commercials. Remember, our buyers, we are looking to go to the downside, and we trade in accordance with what the commercials are doing. They didn't add much on their long exposure, and if you look at open interest, it has jumped quite massively, about 2,000 points, just about 1.2% to the downside. So expect pound to really move to the downside in the coming few days or coming few weeks, we should see weakness creep in on the pound. So I'm expecting the current weekly candle on pound to trade lower. I'm expecting pound to trade lower. Let's see what we can do here. What's the time now? Time is 9:30. We are heading towards market close. Right, I'm gonna open a position here, a short position on pound USD. Right, so this is my short position. This is a weekly time frame, because I'm expecting to hold this trade until Friday, and I'm expecting this candle to close bearish. So I'm going to put my stop above last week's high. Yes, I'm risking about 100 pips. That's about $100 that I'm risking, and my target, I expect price to reach for these lows right here. Right, so this is an illustration already. I've done an illustration for you guys there. I'm not saying short the market. That is your own decision, right? You have to do your own analysis and come to a decision and say, okay, no, I'm going to do this. You can see already where my stop is. This is last week's high, right? These are the short positions that we took. We sold here, and we took profit right down there. So same applies. I've opened a short position here. I'm expecting to see how far this trade goes come Friday, and I'll be updating you guys. Now finally, looking at USDJPY, expect also a pullback to the downside. You can see market opened with a vacuum. We closed that vacuum and dropped. So expect this candle here. This is our bullish order block. We have almost filled the fair value gap to the downside. See this high and this low. Price is almost filled that gap. So expect price to find support in down close candles. Expect price to find support because we are bullish on USDJPY. We're expecting the yen to be weak, and that means price is going to be bullish. And dollar strong, it means price is moving to the upside. So expect yen to find support right around 110.412. I've mentioned that price point since this fair value gap here. You can see from last week we had this fair value gap. Price right came to the pip, right to the pip, and then found support. So expect down close candles to provide support on yen and price move to the upside. So yeah, that's pretty much about it for this week. And when it comes to the precious metal, just a quick note, precious metal, remember sell stops, hello there, these guys here, they're now out of the question. They've been liquidated. Price reached our target, which was 17.58. That was the target on the precious metal, and price has now found support on an old high, old low. Price found support for the past 4 days and rallied nicely 300 pips to the upside. So once we see dollar pushing to the upside, expect the precious metal, gold, to fill up this fair value gap and trade lower. So 1803 on the precious metal is an ideal area for short positions. So yeah, that's pretty much about it. I don't know if there's any other pair that I have left that I wanted to share with you guys. Aussie dollar, we are going to be shorting Aussie dollar, but take note of the RBA rate decision coming during the morning hours. And then we've got New Zealand dollar also. I'll be hunting for short trades on this pair whenever price trades into a premium array that I would have defined and expect up close candle to provide support. You can see right here, this up close candle here, this bearish order block here, price traded right through it and then dropped about 30 pips. So yeah, today was a low volume day because of the holiday, so you won't really expect to get expansions in the market, right? You won't get that. There's no liquidity in the market. But as of tomorrow, expect the market to be moving quite nicely, and for pairs like EURUSD and GBPUSD, we should be seeing some nice moves to the downside, and on dollar index we should see some nice moves to the upside, but only after we have corrected. You see the COT number we saw on dollar, that's a number that tells us that we are going to get a bit of a correction, but we should not lose focus of our long-term bias, which is bullish on dollar. So yeah, that's pretty much about it for today. And if you have any questions regarding the mentorship video, just send me a message in the group so that I can attend to your questions. And unfortunately, if you're not yet a member of the mentorship, you're only going to see this video come Thursday, London Open or New York Open, right? But for the mentorship group, they're gonna get it instantly right before New York close Monday evening. So yeah, if you haven't subscribed, also just click the subscription button below and make sure you've got the bell icon selected so that you get any notifications whenever I upload some material to the channel, because a few times I do upload free content for other people out there. So yeah, your support is greatly appreciated, folks, and you can like and share the video with your family and friends so that they can also learn a thing or two. So yeah, that's pretty much about it. Nothing more really to say other than I wish you guys good luck and happy trading.